And I don't really see gold as competing with Bitcoin or silver just because I see them as two completely separate asset classes. I would never buy Bitcoin for the reasons I buy gold and vice versa, because gold to me is just an insurance policy. It's not a way to get rich, it's a way to stay rich. And with Bitcoin, it's a fantastic asymmetric speculation. So I just see them as two completely separate things. Now, that said, I think long term, what you were saying with your book is really interesting, because you're talking about how in the long run everything goes into hard currencies or hard money, like we've seen in the past with gold. And when you were saying that, it reminded me of Gresham's law. And if Brady, if your viewers aren't familiar with Gresham's law, it's basically the bad money chases out good money. So let's use an example of ancient Rome or some society where they used physical gold coins. And when they get over indebted, what happens is the president or king or whomever says, okay, well, we'll just solve this problem by making these new coins, and we'll just paint them gold, but really they're nickel or they're copper or something like that. You know what I mean? They're trying to pull the wool over your eyes, and they issue more and more of this currency, we'll call it, but everyone knows it's fake. So the more they issue these currencies, the more the real gold coins come out of circulation, because smart people see the value, they see the intrinsic value, and they start hoarding all of the real money. It's Gresham's law.
Yep.
And over the long term, I'm not saying it's happening today, but it could happen with Bitcoin. It's a very interesting concept.
Yeah, but I think the nickel coins are nowhere to be found today, but gold coins are still around today. So I think Gresham's law talks about the which coins will be used for legal commercial and transactions in the country, and the answer is, clearly in Venezuela today, everybody wants to spend their bolivars if they can, but nobody wants to take them. So officially, yes, the bolivar has driven out the US dollar because it is the worst money many, many times over. But in reality, the bolivar continues to drop further and further and further. And any actual real wealth that exists in Venezuela is stored in the US dollar or in Bitcoin or in gold. So, it's misinterpreted by Keynesians to suggest that, oh, if it's an easy money, then it's just going to win out over the harder money. Well, no, it's going to win out because people are just going to get rid of it. But eventually, it's not going to be money very quickly, because it's going to just lose its value quickly, and eventually the harder money will remain.
Yeah, I think that's my point. Yeah.
Yeah, I think this is effectively what's happening with Bitcoin. And you're right in that it is an asymmetric bet now, but it's an asymmetric bet where the positive upside outcome is that it becomes something like gold. It stops being an asymmetric bet. It becomes just the predominant monetary asset.
Yeah.
And we're at least 100x away from there, or maybe 50x away from there, or 1,000x away from there. God knows how much more bull run we have to get there. But Bitcoin keeps going up. It eats everything else. Not saying it will happen, but it hasn't looked like it's been stoppable over the last 10 years. So we'll see.
Yeah, I'm sure you guys have done the math. I'd be curious to know how much the price of Bitcoin would have to go up in order for it to be equivalent to the market value of gold, or the market cap of gold.
It's at about the price of one gold bar, like the 12 and a half kilogram, 400 ounce bar. So basically, one Bitcoin would be worth about 400 ounces of gold.
Yeah, the math I'd like to do is figure out how much gold is in the world right now.
I think it's about 170,000 tons.
Yeah, so then how much is that in dollar terms, and then figure out how much Bitcoin would have to go up to equal that amount.
It's about, I think it's about $10 trillion at this point. If I'm running gold is about $10 trillion. Yeah. Because it's about 180,000 tons, and then 1 kilogram is, I think, around $60,000 or something.
Yeah.
I think you multiply these, you end up with around 10 trillion. It's in that ballpark. So Bitcoin is around 200 billion so far. So
yeah, I think that's your upside.
Yeah.
Exactly. 2% of gold.
And that's,
it's 2%. That's not the upside, actually. That's just one way station on the one base camp on the real launch, because that's just gold right now in a world in which all kinds of other monetary assets are used, because gold is not allowed to be in a free market. If we could have a free market of money, I believe gold would win and everybody would be using monetary instruments backed with gold.
Good point.
But and in that case, probably gold would be worth a lot more than what it is today, because we wouldn't have all these national currencies. So there's also that. So gold, and then there's the national currencies. And then there's the question of how much of the store of value market in the world, how much of the financial markets in the world and the art market and the real estate market is actually just store of value demand that could better be replicated by just going into Bitcoin. You know, how many people are just buying houses and real estate investments, not because they want to own houses, but because they want to store their wealth. And so you think that could lead to potentially more stuff for Bitcoin to eat as it rises.
Another fantastic point. I do a lot of business in South America, and I've been doing so since, call it 2014. And for the Americans or people in more developed economies, they might not get this. But in South America, I mean, I'm going to call it almost 100% of the population stores their wealth in real estate. That's just what you do. I mean, when I was in Ecuador, even the poor people in the fishing villages, if they earned an extra even $100,000, what they do is they just build another 10 or 20 square feet on their house. And they just keep building and building, building and building. And the same thing in Medellin, Colombia, where I've been doing real estate since 2015. I would say, and I had the numbers for this, but almost like 90% of the apartments that are owned there are owned just outright. There's no mortgage on them, because people really don't have savings accounts there. Their currency hasn't been a store of value at all. It's lost a lot more than the dollar, a lot faster. So for them, their house, their apartment, their property, their finca, it's a store of value. It's their savings account. So I think you just hit the nail on the head there. Very interesting point.
Yeah, I think in my book, I argue basically Bitcoin is the most advanced technology for saving that we've ever invented, because it's strictly scarce. You know, even gold was the most advanced, because gold, by nature of its chemistry, it can never increase at more than 1 or 2% per year. But Bitcoin is even more advanced, because in a few years it's going to go below gold's growth rate, and eventually it drops to zero. So it's the one liquid asset that we have in the world that is strictly scarce. There's never going to be more than 21 million. That's it. And when you think about it this way, you know, there's no better thing in which, if you want to store value in the future, this offers, in my mind, the explanation for why we've seen so much gains in Bitcoin. And I think as long as this continues, the case is arguably very strong that this is quite useful as a store of values, simply because nobody can make more of it. We've had 10 years, 11 years of this thing running, and nobody managed to find a way of making 1 Bitcoin more than what should be made in the schedule by this block height. And I think that's an astonishing invention, really. Just thinking about it, it's almost Robert Breedlove on Twitter compares this to the invention of zero. It's a mental construct. Once we've invented, it changes the way that we can do math just by thinking of zero. And in a sense, inventing this first strictly scarce asset just changes the way that we deal with scarcity and with storing value and with saving for the future. It's an astonishing idea.
I would even take it a step further, and that I don't even think it's a fixed number of Bitcoin. I think it's a decreasing number.
Yeah,
we as human beings are always going to lose them. And that may be a crude way of looking at it, but yeah, there might be 21 million, but sure, next year there's going to be, maybe 20.5. And as the years go on, you lose more and more and more of them. And so it's a scarce asset as is that becomes more and more scarce, just because us clumsy human beings are just going to lose our thumb drive or who knows what we'll do.
We call those donations, George.
Okay.
It's philanthropy.